Jacques Cailloux, Chief European Economist for RBS in London. So let me start by putting that question to you, the combined forces of inflation and the debt crisis.
Yeah, I mean, if you separate out the debt crisis and you look at the business cycle and inflation dynamics, you could easily see an ECB that would be talking about ECB rate hikes today.
Yeah.
Unfortunately, this is an ECB which is completely stuck by the sovereign crisis. The sovereign crisis is putting pressure on the funding side for banks, and banks are, from the periphery, are reliant on the ECB funding. That ECB funding is basically putting the ECB in a situation of no exit. And we saw it in December. They had to postpone their exit on the non-conventional measures. That's the headache the ECB is facing. It's stuck with this excess liquidity, which is preventing them from continuing their exit. So I think today it might be interesting whether there is any new information regarding the so-called addicted banks. Trichet mentioned a few months ago that they were thinking about this issue and trying to sort out this problem. So it'd be very interesting to see whether we get any new information on that front.
But then he sort of did something of a U-turn, didn't he? They were talking about limiting emergency lending to banks, but if they are in fact addicted to it and there are already concerns being raised over the banks, how on earth can they start to reverse that policy?
Yeah, I think there is a willingness to exit, but there is an incapacity to exit because of the situation we're seeing from the Irish reliance. We saw Portuguese numbers yesterday showing increased reliance on Portuguese banks on ECB repos, so there is no exit at all at this stage, so they're stuck basically.
And Spain's banks?
True, yeah, although if you're looking at the reliance of Spanish banks to the ECB, they've declined very sharply since the summer, peaking at about 90 billion, 60 billion, I think, on the last number, so a very sharp decline. This reflects probably reliance on other sources of short-term through clearing houses, which might bring a bit of relief short-term, not medium-term, but short-term.
And will that continue to be the case even if those banks find it difficult to tap the markets?
Well, we saw it in the case of Ireland. Access, for example, to clearing houses worked for some time, but then they got blocked through rising haircuts on those clearing houses. So I think the tension and the risks are still definitely there as far as the funding situation is concerned. We don't see any meaningful improvement in the situation. And if you look at the cost of funding remains extremely high, which is the major problem at this particular stage.
Jacques Cailloux, Chief European Economist, Royal Bank of Scotland. Great to talk to you.